Mr. McDowell, you're on the call now?
Yes, yes. Oh,
Okay,
I'm
great.
sorry. McDonald.
Welcome. Oh, no,
I think
Mr.
Dave's on
McDowell.
there also.
Yes, I am.
Hi, Dave.
Both of you then,
All right.
okay. All right, Mr. Land,
Here.
Mr. Looney,
Yes.
Mr. Zach.
Here.
Okay, I think that's everyone. Turn it over to you, Mr. Porter.
Thank you. A little information for everybody now. We'll hear these discussions and reports, but I'd like for you to hold all your questions till they're completed, and then we can go down the roll and ask questions and discussions after each presentation. Does everybody understand that? So, and be sure and announce your name so Christine can get it on the record and keep notes on it. That's all right with everybody. And tentatively right now, well, I'll do that. I'll do E later on at the end of the meeting. I guess we're ready for the discussion, the new municipal advisory firm for bond issues, the PFM Financial Advisor.
Yes, I'll introduce this. So this is Brian Kidney, the Director of Finance and Administration. And this is really a follow-up from discussions from last month when the questions were about the outstanding debt and refundings and what we can do with when debt is available to refund. And it was a very timely discussion because we were just finishing up an RFP process and selection of a new financial advisor or a municipal advisor. And so the city sent out RFP. We had I think we had 5 responses and 4 very good responses. And so we went through and analyzed the best responses. And you'll see in your packet, we have a little summary or a little introduction to PFM Financial Advisors. And it just talks about the history of PFM, the experience that they have. But the big thing that really stood out to the selection committee was the graphs that show they by far handle the most municipal issues, and both in the Midwest and nationwide. And out of all the firms that would have been available, they do by far the most public power long-term municipal issues. And so we were lucky. We feel very comfortable with the firm, with the prices that they quoted, and most importantly, the team members that they assigned. There's a small bio on the three gentlemen in the blue shirts here, and I'll pass this off to them here real quickly. But just real quickly, the managing director is Chris Lever, who's been in the industry for 21 years, has an amazing representative client list, and a lot of good credentials. Owen Gerard, senior managing consultant for 7 years. Again, great credentials, also has a lot of Missouri clients under his belt. And then Joe Fisali is an analyst, and he's been with them for a year, and again has worked on other electric issues. So the first thing right off the bat that we talked with them about, and they were anxious to talk to us about, were the ability to do refundings on all of our debt. They took a comprehensive look at all of our debt, and the one that really has popped out for us, as I think was mentioned last time, was the 2010 B, that we have hit a place where we've reached that point that we're able to refund them. There was a call provision in there that we couldn't refund them until this year, until we're at that point. And so they're going to talk a little bit about the refunding of it, and then also talk about some upcoming discussions about those either performance measures, but also talking about our financial policies and how they would help us talk through and manage what financial policies we need to put in place, but more importantly, what level of financial policies or what level of different things such as our liquidity we would have there. So with that, I'll just pass this off then to Chris. If you want to just take over from here and show them your presentation.
Sure, Brian. Thanks for the introduction. And I know speaking on behalf of Owen and Joe, we're glad to be here and work with Independence and the utility systems. And really, it looks like you have quite a bit of interesting things to do. And Brian, I have my presentation. Is that going to be shown, or do folks have it in front of them, or do I need to share it somehow?
Yeah, Chris, would you be able to share it? It's on the bottom of your screen. You would have a camera, sound, and then the next one with the arrow through a box says open or share.
All right, I think I just clicked some buttons, and we'll see if it pops up.
There you go.
Brian, this is Christina. I just want to mention one thing real quick, if you don't mind. Most of the PUA board, or a portion of the board, are only calling in with their cell phones or their home phones, so they're not going to be able to see that. So as you move through that, would you just please make sure you're saying like page numbers and things so everyone can follow along easier?
Yes, I will do that.
Thank you.
Okay, great. Thank you.
Okay, so we're going to move on to, I'll call it the second slide here, the debt overview. And you should see a whole table of numbers. And what this represents is the outstanding debt across the three utility systems. The first one is power and light, the middle one is water, and the last one is the water pollution. And the things that popped out to us as we looked at this is that you have this first one that says a refunding opportunity, the 2010 Bs. This is about $10 million outstanding. And if you look to the far right, you'll see it's gone past its call date. So we can conduct what we call a current refunding for savings and have a plan to basically reduce your debt service, and similar to refunding your own home mortgage or refinancing your home mortgage. So you have this opportunity that exists today. And then as you look down that right-hand column, across all three utility systems, you can see these call dates. You have 2022, and those total to about $80–90 million of refunding opportunities. You look further down towards the water fund, that's 2023 call dates. And when you go down to the water pollution control, your call dates are, again, 21, 23, and 24. So what that shows us is that every single year, the city and the utility departments will have an ability to do a refunding transaction, reduce their debt service, which should also lead to some better metrics, meaning better debt service coverage, better coverage of full obligations, and also likely cash flow savings and improved cash positions. So if we go to our next slide, this is a chart where we mapped out what this debt service looks like across all three utility systems over time. So it goes out to the final maturity of 2046. Since it applies to all three systems, it just kind of tells you the burden on the city, I guess you'd say, or the ratepayers in the aggregate. But on our next slide, we focus more on IPL. So this is the electric system, and this is what their debt profile and debt service looks like. It's about $10 million per year. We do show the spike out in 2037. The reality is that light part in red dots is a debt service reserve fund that will pay off a good portion of that debt service. So it's really pretty flat all the way out to 2037. The other item we noticed is that starting in 2038 through 2046, so the area where you have just the purple bars, that gives IPL quite a bit of flexibility for issuing more debt, to address future generation needs, whether that be a new gas plant, a portion of a gas plant, a peaking plant, a wind farm you're going to buy, solar you're going to build, AMI, but you do have flexibility out there. which is nice to see. And in addition, we would anticipate that you have the ability to go out past 2046. So you can go out to 2047, 48, 49, 50. So you have a lot of capacity out there to issue additional debt. For our topic today, the debt service we're looking at is that little orange sliver at the bottom. So that's the debt service associated with the 2010Bs. And at the end of this refunding, we would see that orange bar, that dark orange little block get a little bit smaller. That's what ideally will happen once we conduct this refunding transaction. On our next slide, we have some background information on the bonds themselves. They were issued back in November of 2010, about $33 million. You've paid off about 2/3 of that, so about $10 million remains. They are currently callable right now from bondholders, and we could take a tax-exempt issuance at historically low rates and achieve some nice savings. And what we've calculated here is a number that we believe to be realistic yet conservative, about $2.3 million in net present value savings, so accounting for the time value of money there. That represents about 22%. So sometimes we ask our clients, if you could save 22% on your home mortgage and reduce that by, say, $400 a month, would you execute that transaction? And most people would say, yeah, I'd do that in a heartbeat. And across our clients, we see a 22% savings number not that frequently, meaning this is a very nice number and something that, really I call eye-popping. We see a lot of folks move on transactions at about a 5% level and sometimes at a 10% level for a threshold. But this one at 22% savings represents some really nice saving statistics for you. Now, the bottom bullet talks about how do you operationalize this refunding opportunity and how do you make it come to reality. And you have three options that we've identified here. You could have a negotiated sale, and that basically is your typical bond transaction. And what that would require would be the city and IPL to basically interview banks, select a bank to lead the transaction, update your 300-page disclosure document, go through the S&P ratings process to receive ratings, and then you come to market. That will take about 3 to 4 months. The second one is a competitive sale, and instead of hiring the bank first, PFM and your bond counsel will do a lot of the work in terms of that 400-page disclosure document and the rating agency process, and then basically you put the bonds out for auction. And the lowest bidder wins, and that would be a bank. So you're selling these to a bank at that point in time, and that will be another 3 to 4 month process. What we are thinking about is this last one, which is a direct purchase by a bank. So this is essentially a bank loan to the city. And the nice thing about this is that it can be conducted fairly quickly, meaning about, call it 30 to 60 days is what we anticipate. And really above all, there's no need to go through a ratings process, and there's no need to update the 400 pages of disclosure for a transaction. So it offers an expeditious way to get at the savings while avoiding interest rate risk and eliminates some of the, I'll call it a burden of the work of ratings and disclosure. On our next slide, this talks about our current rate environment, and it's really not a very, I'll call it a very sexy graph. It's just a blue line, but what it shows you is that rates are at historic lows. And we have a dot here that shows that for some issuers, and these are folks who are rated AAA, they could basically borrow millions of dollars for under 1.5%. So a tremendously low rate environment, primarily caused by our COVID pandemic, the Federal Reserve actions, and of course our US government actions to do all these monetary easing and fiscal policy. So really a great opportunity. And maybe you've seen it in your market in Independence with folks refinancing their mortgage, but it's the same concept here. Slide 8 shows the math and the numbers behind what we would anticipate for savings for this transaction. So the refunding of the 2010Bs. We have some dates up here that we close this transaction by September 2020. So in a few short weeks, that might be a little aggressive, but I don't think it's too far. If it's 1 month, I don't think the savings evaporate or anything. And on the bottom, I'd like to just focus your attention on where it says number one, that's the NPV savings. So that's the $2.3 million or about 22% savings. So good, very, very strong savings metrics. And we have this number above that saying true interest costs. So we've modeled a 2.75% rate for this refunding loan, which we feel to be realistic but conservative. So hopefully it comes in a little higher than this, but we feel that's a realistic expectation. Our next slide shows the financial impacts of conducting this current refunding. And again, we show the debt service up in the top block here, but I'd like to focus down on the bottom on the blue tables. And what it basically shows you is the impact on IPL's metrics, the financial metrics of debt service coverage. So we forecasted 2020 through 2025. We have the expected debt service coverage in the top number starting at 3.07 for next year. And then since you're achieving debt service savings, we would anticipate the coverage levels to go up, which is a positive sign and would be viewed favorably by the rating agencies. So a nice number and still very strong numbers at above 3.0 times coverage. On the right-hand side, the table down there, it just shows you for the first 5 years and the first 5 years only, what IPL can expect for the cash flow savings. So under that column labeled gross savings, you could see it's about $180,000 next year, and then about $240,000 for the next few years, and tapers down to about $140,000. But that's the cash flow savings that they're going to achieve by conducting this or funding. I don't know if you want to stop here since we have a transition to another topic, or Brian, did you want me to just keep on charging through here?
This is Larry Porter, chairperson. Let's stop right here, and I'll start with Mr. Land. Do you have any questions on this or comments, Mr. Land?
So I assume that the 22% savings is over the period of time. That's not per year. That's over the course of time, is it?
That's in the aggregate savings of the current debt service versus the new debt service.
Yeah. Okay. I think that's all. Only question I had. Thank you,
Mr. Looney.
Only question I have is just we're focusing on this 2010B. Another 2 years later, the 2012A is due. Are we going to be looking at refinancing some of these other debts, or is there a reason for waiting or not approaching them now?
Yeah, I think we would call this the low-hanging fruit, meaning that the first thing we can really get to quickly. The other bonds, there's some legal limitations on conducting a tax-exempt advance refunding for the call dates that are that far out. So we have to have some other plans. Now, we have looked at these other statistics, and there are other opportunities out there, and I think that's a topic for another PUAB down the road, but there are some options for dealing with these other bonds.
Okay, that'd be interesting to hear. Thank you.
Ms. McCandless?
Since I'm new, can you explain what the process is for how this proceeds through? Does the PUAB make a recommendation and then that goes to the city council? Are we just informational only? Can you explain what the next steps might be?
I can do that for you, Bridget. What we would do after this is completed, we'll ask for a motion to recommend this to the council or not recommend it. And we do that after we hear the complete discussion.
Thank you.
Anything else?
No, sir. Yeah. Thank you.
Josette?
Oh, nothing at this time. Thank you.
Mr. McDonald?
I got the question I have is, did we look at repayment at this time?
Excuse
me. Go ahead.
Yes, I think we looked at repayment, but the idea here is that there's a lot of cash you'd have to set aside for that. So it would adversely impact the cash balances, which is really one of the topics of our next section here. So the nice thing about a cash defeasance is that you don't have really borrowing costs with that. The downside is that your cash levels drop, and especially in a COVID rate environment, we have seen a lot of our issuers kind of back away from the idea of doing a cash defeasance just because they want the flexibility and the cash in the coffers in case this recession goes on a little bit longer than we anticipate.
Well, I guess my question is, instead of 22%, we'd be looking at 100% savings, correct, on servicing the debt from this point on for that 2010B?
It wouldn't be 100% savings, but I mean, there's an opportunity cost in there, and you have to buy an escrow and the like, but it wouldn't be 100%.
Well, I'd like to see that data.
Okay, we could get that to you.
Thank you. That's all I have.
Thank you, Mr. McDonald. Anything from you, Mr. McDowell?
Nothing at this time.
Okay. All right, I guess we can continue with the rest of it, Chris, if you're ready.
Sure. So I think I just realized I was showing you my notes too. So you got to get all the secret sauce here, at least on my slides. But
well, they're still secret with me.
So we have the next section talks about resiliency and cash balances. And the question comes up for many issuers and many governing bodies. How much cash should I retain in the utility? Why should it be a certain level? And how do I explain it to people, whether the people are the rating agencies, whether there's a ratepayer at a meeting, but what is the right level of cash to hold at a utility? And that could be power, water, sewer, any type of utility. And what PFM has devised over probably the better part of 10 or 15 years is what we call a resiliency and a cash balance study. And it really aims at answering that question of, this is a prudent amount of cash that's discretionary, and that can be used to really address the following risk areas. And what we've included here on our next slide is a table that essentially walks through some of the risks that we would see applicable to IPL, this way it's electric utility. And what we do essentially is say, what is the risk that revenues won't materialize? What is the risk that you're going to have your expenses come in way higher or way above than your projections? And finally, this working capital area of how many days cash do you kind of need in the bank to cover your operating expenses so the CFO and the finance directors can sleep well at night. So as you walk through these, there's a couple examples. General sales decrease. This is kind of a macroeconomic event. So think about a COVID recession or something along those lines. And what we basically say is that we need to reserve a certain amount of cash to cover fixed costs. And over on the right-hand side, we have it broken down in a couple buckets. So the first bucket would say, we'll be able to work our way through this recession. Things will rebound in 6 months, or maybe it takes a year, but in that year, we'll have a little bit of a rebound. We might be able to put a rate increase through to keep our metrics where they are for the utility. Or on the more conservative, that says that we need to put more dollars aside because this recession is going to last a year and a half. No real magic to those numbers. It's just the 6 months versus 18 months. But it's just a way to try to measure how big this risk is. Just going down the line here, large customer exposure. What happens if one of the larger members of the community that provides a lot of revenue, or 5, 4, 3, 2% of the overall revenue to the utility, what if they go out of business? If you have a lot of wholesale sales into the market, so if you have a plant that's operating and it's selling a lot of power into the market, the utility benefits from that margin it receives. So what happens if those sales don't materialize and they can't be spread out to offset the cost or subsidize the cost of your true ratepayers? And the last revenue risk, for example, investment income. What happens if interest rates fall really to the floor and our expectations of achieving 2% interest, an interest rate on our investment is much less than that? So we put a metric to it, and then we go through and say, which one do we feel is the most likely to happen? So we just don't go down one column, or we don't go down just one column and add it all up, but we have a discussion with the leadership, and plus our experience with other utilities. And the green boxes essentially would represent how we would aggregate this into a dollar level. So the nice thing here is that you could then turn around to a rating agency or your ratepayers, and they say, why do you have $50 million sitting on your balance sheet? And you could say, well, here's what it represents. It represents a lot of risks we're working to address. What happens if we have a recession? What happens if we lose the biggest employer in our town? And then if your expenses come in, for example, renewable energy can be expensive. What happens if the wind blows too hard and we're required to take more expensive energy than buying energy on the marketplace? So really, it's a nice way to bin and bucket these items. It takes a decent amount of work to understand the workings of the utility. And one of the side benefits of this is not only the dollar level, but I think everyone gets a better understanding of the risks facing the utility as you go forward. So it's a decent homework assignment for everyone, and a lot of good lessons to learn, not just with getting you a number that's defendable, but just a better understanding of the inner operations of the utility. So I think that wraps up the cash balance study. So if there are any questions, maybe we go here, or I don't know if we want to go here, Mr. Chair, go to the wrap-up piece.
Mr. Land, do you have any questions on this?
Yes. So Chris, are you offering to lead us through that discussion of putting a dollar figure on each one of those boxes in that matrix?
Yeah, absolutely. So we've been talking with Brian at the city and Kendra at the city to see if they'd like to do this and how applicable it is and the level of effort required and those types of things. But we think it's very applicable to primarily the electric utility, but also nicely applicable to the water system as well as pollution control.
Well, I think that would be very helpful, because this is a discussion that we've been having for some time as to what kind of cash balance we should have, and we really don't have a good policy. We do have a 90-day reserve now, and we have $13 million in non-restricted resources available. And Mark and I kind of brought up the discussion at the last PUAB meeting as to should we actually pay off the bonds as opposed to reordering them as you described. And so I think there really is genuine interest in following through with this matrix, and it will resolve a lot of policy issues that have been open issues for us for some time. And so I, for one, am really encouraged by having this discussion in the future and getting this resolved.
Okay, thank you. Thank you, Mr. Land. Mr. Looney?
No, sir.
Mr. McDonald?
Nothing.
Nothing here.
Mr. McDowell?
Nothing.
Jozak?
I pass.
Mr. McCandless?
I had the same questions that Garland had about having a thoughtful methodology for the amount of cash reserves that we maintain, and how we make that discussion available so that the public understands why we keep those reserves. Thank you.
I agree wholeheartedly. Chris, in your reserve levels and stuff, and the cash amount, would that not come later after approval of this and going further with this?
I think we would conduct the study and say, here's what we feel a prudent reserve level is. It's just a question of timing of, do you pick the low-hanging fruit of the 2010B refunding versus doing the study? And the study, Joe and I just finished one, and it took 2 months probably of not full-time work, but part-time work. So it was a lot of data gathering, but I think it's a matter of timing. Do you want to do the refunding first to get the savings off the table and then focus on this, or pause for a second and kind of do them hand in hand, and you'd have the recommendation of a cash level of X, which would mean cash available of Y, and what you do with that type of cash level.
Okay, I guess my next, has this been presented to the council yet?
So I'll address that. This is Brian.
Brian?
The plan is to take this to the council on September 8th, along with a resolution asking them to consider allowing staff to move forward to do this refunding. As to the cash balance policy, yeah, we had anticipated having this presented back to PUAB either in your October or November meeting, which would line up really well as we prepare for the next year fiscal budget. And then also, as was mentioned earlier, taking a look at other refundings on the debt. It would fit in really well with the timing on those.
Well, according to Chris, so is that going to be, somebody hold their dog up. Is this going to be fast enough? I thought you said it'd be, the quickest way would be a month. Is that right, Chris?
Well, once we can start some of the process, but there was a question of, do we get an RFP to banks out in the short term, or should we wait for the approvals? And I think once we get the approvals and put the RFP out, it's a fairly quick process. So about a month once we pick a bank.
Okay. All right. Any other questions from anybody? Okay, I guess we can go on, Chris. To your recommendations.
All right, my recommendation is my dog be quiet, but we'll see if she listens to me at all. So, and this is basically a summary here. Historically, low rates exist. If we look at the projections of where rates are for the rest of the year, they look like they're going to continue to be low. So it's a great interest rate environment. We believe that we want to capture this 2010B savings quickly. It has some great savings statistics. Over 20%, which makes us, excited as a municipal advisory firm. It's a very, very strong number. We think the direct purchase with the bank is probably the best way to go because it's the quickest. It has a very low cost of issuance, and these other fees, since you don't have a rating agency involved, you don't have essentially an underwriter charging you to place the bonds with an investor. The shoe leather costs, I'll call it, of staff putting together the updated offering documents, so disclosure documents are not needed, and you don't have to go visit the rating agencies. And those really can compress your timeline as well as your costs, so it's a nice benefit here. We also have developed an RFP that can go out to these banks, so we can run it like a competitive process. So we're not just going to go out to one bank and ask what's the rate from you guys, but it'll go out to a broad distribution of local banks, regional banks, and national banks. And we think by going out and casting a wide net, we can get a nice rate, and we'll be able to show you a very good matrix of who bid on this and what those rates are, so it can be very transparent. And finally, we'll be willing and ready to stand by and say we think that the rate provided through this process is fair, it's market-based, and we'll be able to have some comparables to show the city and IPL that, yeah, this is in fact a good rate for conducting this transaction, and we recommend proceeding.
Okay, Mr. McDonald, you and Mr. Lane you want to refund or pay off the 10 million, is that right? Or the 2010B?
I'm just speaking for myself. I totally appreciate what the gentlemen have done here. And I do think that in the future, we need to look at every one of those issues. But now that we have an opportunity, and I truly believe we go to the 90-day reserve number that we have in there now, we have the $10 million available. There's a couple of capital projects that were assigned to a few things that I don't know will actually take place. But I would like to see us actually get rid of some of this debt. I, quite frankly, was amazed with how much debt we actually have. It's changed my attitude about where we are as a business and also as our role as a PUAB. So no, I'm in favor of paying the thing off when we can.
Okay, my other concern is, do we really have that much money to pay it off, since we've already got 25 million because of the emergency fund? Is that right? Mark?
You'd have to ask Brian.
Brian, is that right?
So first of all, the city has not drawn down any type of debt as part of that resolution.
Okay.
And if they were to, the debt itself, the way it would be funded would be by all funds participating, not just the IPL fund.
Well, yeah, I would assume that it all come from the enterprise fund, from WPC, water and power.
No, it would come from all funds. It would be taken out of a what we call a pooled cash fund that includes all the balances for all funds.
Yeah, and I do think the savings would be substantially more than 22%. But anyway, thank you, Brian, and thank you for everything you've done.
Okay, Brian, thanks. I guess I should, at this point, ask for a motion from somebody as to whether approve this to send to council or recommend it to the council or not recommend it. Would somebody make a motion?
Jack Looney with a question here.
Jack?
Should we be voting actually on two separate items? One to recommend refinancing of 2010B, and then actually kind of suspending any action on cash balance review until we see, or cash balance policy until we see some of these things translated to numbers. Am I incorrect, or is that correct?
Well, yeah. This is just for the recommendations of this TFM. What they're recommending on the 2010B savings, I don't. Chris, is there any way you could have it work up by our next meeting, or we can call it a special meeting? How quick could we get a actual report on what it'd be what savings we'd have if we paid off the debt, the bond?
I think we could run a scenario where we defeat this with cash, and you could see what the savings would be probably by, I'm talking for Joe and Owen, but probably by early next week, I think.
Okay, well then, if we could do it next week, what's everybody feel about? I'll call a special meeting. I got to work on some meeting things with Adam anyway. Would you like to table this and ask Chris to bring back the actual cash figures if we pay off the bond? I hear a motion for that.
Mr. Chairman?
Yes.
Mr. Chairman, this is David McDowell.
Yeah, David.
One of my concerns, and has been for some time, and I've asked for it from city staff, I would like to know where we stand with our ratepayers on delinquencies. I read an article that showed that 34% of the nation's people are behind on their rent. And if that's a severe problem here in Independence, we need to be thinking twice before we start trying to pay money back if we're going to have a problem 6 months down the road. And I would like to see where we are with our ratepayers. I'd like to know what the delinquency rate is, how much delinquency is on the books, and has it increased in the last 90 days? I mean, those are just simple questions that really we shouldn't be paying off debt if we're going to have a debt problem ourselves because people aren't paying their bills. That's all I have to say. You guys can hash it out.
Yeah.
Well, you're part of the board. You can hash it with us.
Mr. Chairman?
Yes.
This is Garland. Yeah. I'm very sympathetic to paying off the debt, and I really want to do that also. But I think we need to have the numbers, the study done in terms of what our cash balance needs to be to understand what we should be doing in that regard. You know, we lost $3 million last year, and I think we need to understand why we lost $3 million last year. Is that just a single year incident, or is that something that we need to be looking towards in the future? And I think the matrix that has been presented will help us understand what our situation might be for the future, so that we have more data to look at for can we afford to do the paying off the debt. I agree with Mark. I really would like to pay off the debt, but I want to be cautious in doing that we don't just pay it off and then find ourselves that we've got a situation that we didn't realize because we took some premature action. So I guess my preference would be go ahead with the recommendation to do the refunding of or changing of the loans, and then let's do the study and see where we stand there, and see if it's best to do the paying off the debt with the next set of loans.
Mr. Chairman, Mark McDonald.
Yeah, Mark.
I'd like to ask these gentlemen, if we refund it now, when would be the next opportunity that we could actually pay it off again? If we had that, when would it be callable then?
Okay, I have, I guess, two comments. I think the average life of the 2010Bs is about 11 years for this refunding. So that means you really wouldn't have another opportunity to refund these again. However, if I go back to your debt table here, you could see you have June 1st, 2022 is your next opportunity. You have two series of bonds totaling close to over $90 million. You could always take that opportunity, put some cash into that transaction, and that will increase your savings for that transaction by putting essentially your own equity and investment into it and issuing a smaller amount of debt to defease all of those eligible bonds. So, even though the 2010Bs might, if that passes you by, there's a train coming, basically right down the tracks, and you could jump into that transaction with a cash infusion also.
Thank you very much.
Okay, Christine? What's the schedule look like next week that we could meet again?
I couldn't say offhand. I'd probably have to check with staff and our calendars. Usually there's a standing meeting, though, special meeting that we have tentatively on all calendars for the first Thursday of the month.
Okay. Well, they could have that report on the actual cash amount by then. Chris, could you have that by then, the first Thursday of next month?
I guess two questions. If we just want to know what the savings are for a cash defeasance of the 2010Bs, I think we can get that in short order. It'll be a table of numbers that essentially looks like the slide we show right here. So you'd be able to do a side-by-side comparison of what a cash defeasance would look like. If you want the study, that's can't be done in a week, but maybe full court press and get it done in a month. But it does require a lot of interface with the utility staff to understand the line items in the income statement, and also operational items about where they're getting their power from, how they hedge fuel and rates and power rates and the like that. So,
well, I don't think we're asking for that. I think we're just asking on the actual cash savings of paying off the bond or refund or refinancing. Is that correct, Mark? Mr. Land?
That's exactly what I'm looking for. see what the opportunity costs are if we go ahead and pay it off, or if we go and just extend this on down the line, just like when you refinance a house. There's going to be cost involved. It may be less cost than what you had before, but you still got total cost.
This is Bridget.
Hi, Bridget.
Thank you. While it is, you're looking at paying off versus refinancing, you also have an unprecedented economic situation that may require us to maintain as much flexibility as possible, and maintaining a reasonable cash reserve in a time of uncertainty is, I think, very prudent. I understand why you're asking for the estimates of what our cash reserves should be in order to make long-term decisions, but it sounds as though we're only making a 2-year decision, not an 11-year decision, since we have that large amount of debt that would need to be discussed again for the 2022 offering.
Yeah, I'm not in favor of postponing the decision to go with the PPM recommendation. I think I'm supportive of making supporting the recommendation today.
Okay, can I have a motion on that then?
I'll make the recommendation that we agree to the PPM recommendation and forward that to the city council.
This is
I have a
Bridget.
second on it.
Bridget
Do I have
McCann, second.
All right, any more discussion on it? Please call the roll, Christine. Christine?
Yes,
Hello?
I'm here. Yep, I'm here. Bridget McCandless,
Yes.
David McDowell,
Yes.
Garden Land,
Yes.
Jack Looney,
No, not at this time.
Joe Zack,
Yes.
Larry Porter,
Yes.
Mark McDonald.
No.
Okay, we have 2 noes, motion passes. Okay, Chris, thank you very much for your presentation. You got everything on that, Christine, that you need?
I believe so, yes, thank you.
Hey,
Okay,
Thank you.
next
Mr.
thing on the agenda is,
Mr. Chair, this is Adam Norris. Could I say something real quick, please?
yes, Adam, go ahead.
Thank you. I just want to address Mr. McDowell's question. That information that he's referring to is on page 81 in your packet. So it
I only
starts.
got 80 pages.
You got over 80 pages. This is a big packet, but so it's easy to miss, but it's back there, that information.
Did you get that,
Mr.
Mark?
Porter, this is Christina.
Hi, Christina.
Hi, I believe that might have been what we're referring to under the water department reports, if I'm not mistaken. And I believe Dan could answer some questions there.
I'm
Okay.
still looking for page 81, guys.
Yeah,
I don't have an 81.
it takes a while to scroll there, believe me.
Well, the pages aren't numbered. I don't know if everybody else's documents that way, but mine doesn't have numbers on
Mine either.
them. It'd be helpful if we had numbers in the future.
Are you looking at that electronically, sir?
Yes, sir, I am.
Okay, in Adobe.
Yes.
Okay, at the top of the Adobe page or the screen, it'll say page numbers there. It'll say like 81 of page 83 or page 15 of 83. It's towards the top of that screen.
So I'm looking at that one right now, and it says March in the upper left-hand corner. Is that the page I'm supposed to be looking at?
So there should be a page number that as you scroll through, it'll say you're on page 75 of 83 towards the top in the center.
It should say March in the left upper corner. You're correct.
Okay, so that's what I'm looking at. Is there someone can, well, we can do this
And I
later,
know
but I would
Dan
like,
will, sorry, I misunderstood your question. But yeah, that's correct. And Dan will speak to that during his water department update.
great, thank you very much.
Okay, is everybody confused now so we can go on?
Mr. Chairman,
Yes.
keep referring to that question. Which precisely question is it?
I believe it was a question about where we are with utility payments that haven't come in yet.
Okay, thank you. I thought that was it, but I wasn't quite sure.
That's the one that Mr. McDowell asked about.
Yes, and I haven't gotten to 80 yet, but,
Okay,
Press
can we go?
press that again, under the water department.
Yeah.
Okay, thank you.
Can we go on to the IPL Management Analyst Report?
I assume that they're ready for me then. This is Mark Singletary. Glad to be here this afternoon. And hopefully on my screen, you can see the title page for the Independent Power and Light Efficiencies and Effectiveness Performance Audit. Can everybody see that?
Yeah.
No.
No.
Christina?
Yes.
Is what I needed to do was hit the share button.
I believe so.
Who doesn't have a report?
Everybody should have one electronically, so they can follow along at least.
Well, I don't have it electronic. I got it printed out.
Okay, that's fine. So electronically, we're looking at page 20, which says Independence, Power and Light, and Efficiencies and Effectiveness Performance Audit from July 2020.
Right, that's what I got.
That's okay. Just trying to get everybody on the same page there.
Everybody got it?
Yes, sir.
Okay, go ahead.
Okay, so if we scroll down just past the table of contents, I want to begin with the transmittal memo dated July 10th, which is when this was presented to the Audit and Finance Committee. Just to remind the PUAB that the purpose of the audit was to look at the efficiency and effectiveness of the current programs and services by looking at costs and performance metrics. The report is in two sections. I have the findings and recommendations, and also I went through and developed an activity budget for the current programs and services. So I want to spend some time on both of those this afternoon.
Okay.
And quickly there, you can see the 5 primary findings and then the 15 recommendations. We'll spend the majority of the time talking about those one by one as we get there. All right, so if we scroll down to then, it's going to be page 26 of 83. The first page on the activity budget and performance metrics, titled Transmission and Distribution. So what I did was go in and look at the whole what's in the program budget that you'll find online. You'll see the full budget for transmission and distribution, which is 14 million. On this page and on the following pages here, I went and identified 10 distinct efforts that they undertake in order to transmit and distribute the electricity. And you can see those there in the chart the table FY20 budget and personnel by activity. So within that transmission and distribution budget, you can see administration, overhead, lines, underground, et cetera. And the number of FTEs, budget and FTEs for each of those. Moving on down then to the next page, overhead line maintenance. So for each of the big programs, I have one page on the overall budget, and then I go down and start to look at the individual activities. So the first activity I looked at in the T&D program was overhead line maintenance. So out of that overall budget, you can see that personnel we have is 15.8 million, and the total budget that we spend on the overhead line maintenance is 2.9 million. We've got 8 journeyman linemen, 3 apprentice, and 4 crew leaders. You notice that the T&D superintendent I've allocated across the various activities that superintendent has responsibility for. And that's why there's 0.8 of a cost there. Then under the service efforts and accomplishments, I talk about how they spent their time. And you can see according to the work order system, and according to CityWorks, and as well as the payroll system, you can see the work order type, the amount of time, the number of hours, and the percent of time overall that they spent doing those tasks. So you can see here that 90% of the time was spent on the overhead line system. And then 2 key metrics that I tried to get to for each of these activities was the budgeted cost per position, which for this activity is $184,613. And then also the cost per mile of overhead distribution. And in this instance, it's $5,169. The purpose of those 2 metrics is really to begin the benchmarking process that hopefully will continue as soon as DKMT continues with their project. I slowed down and kind of cut short the work that I was doing when DKMT came online because they were going to assume a lot more of that kind of work. But really, one of the premises of my report is we can identify the costs that we have, but then it kind of leads to a so what. We have to begin to look at that in terms of other utilities and begin to understand if our costs are in line with how other people do business. So then I guess we could spend, I don't think we have enough time to really dive into each of these activities. And it's more of this might be more of a reference tool for you that we could come back to. We could talk about this whenever you wanted to, if you wanted to go into more depth on any of these. But I wanted to make sure that everybody understood how I was looking at the activities, at the overall budget, and then each activity. Any questions about my methodology or presentation there? Like I say, I think it's, you can walk through it and probably you already have, you might have questions about the format or what I was doing.
Mr. Lamb, do you have any questions?
No, my only comment was, I think it's good to start the process of benchmarking. And I understand that he didn't have any reference points with other utilities. And I think that's going to be critical to us to have benchmarks with other utilities. Having benchmarks by themselves really isn't very useful to us. But the other consultant mentioned this also, that we need to have benchmarks with other utilities so that we really know where we stand with our costs. And I think that's where we need to be going in the future.
Mr. Looney?
Yes, regarding the charts we just went through, I find it curious about the number of hours we spent on overhead lines versus underground lines. when the mileage is about, of underground is about half of what it is on the overhead according to these statistics, but the hours spent for maintenance is far, far above that. I'm wondering why, asking the utility, why we don't spend some more time with installing underground lines.
Well, are you
Like it-
talking, if
driving.
you're only on the overhead line maintenance page on page 27, that's just the overhead line. If you go to page 28, you'll see the cost for the underground line maintenance that maybe with what you're looking for.
Yes, sir.
So there I
Seems
go through, do the same thing. Okay. Go ahead.
Jack, anything else?
I guess I'm not catching it yet. I'm reading through the information here and looking at the charts, and overhead lines just in hours like 6,888. Underground lines are like 198. Yet when you look at statistically, it looks like there's half as much underground as there is overhead. So it seems like overhead costs are far above maintaining underground.
And then Jack, go to the next page.
Which is next page?
Underground line maintenance. So
I'm there.
What I'm saying is the crews that are designated as the overhead line maintenance crew, they spend 1% of their time on underground stuff. But here, the crew that is identified as the underground maintenance, here's the breakdown on this page. And you can see on their work order types, the underground work order types, you can see how they spend their time. And there's 20,000 plus hours.
Okay, my apologies. My phone is cashing out. I'm going to have to hang up and call back in on another phone.
Okay, Jack. Mr. McDonald, you got any questions?
I really don't have any questions. I do have a comment. I can't believe the report I read that you put together, Mark, is very insightful. I thought it opened up some ideas to actually save some money for the organization. And I loved when you got a comment or someone said this is what happened on a certain day. You actually went to the time records and you actually detailed out what was actually going on about inclement weather was one of them that I off the top of my head I'm thinking of. And it didn't meet the criteria. And I truly appreciate when we talked about unbiased. The other night, the word unbiased came from the other consultant. Seems how I've never spoken with you, Mr. Tony Ferry. I appreciate your true unbiasedness and going through actual documents and actually what is going on. And I truly appreciate that. Thank you.
You're welcome.
Ms. McCandless?
I second the comments about what a thorough and thoughtful report this is. I spent some time with it. It was a good learning tool for me. My question is, are those benchmarks available and will DKMT provide those to us for what other municipal run utilities are spending on their deployment of resources? I just don't know that this report's available from everyone else who's doing work in this field. So that's my question.
That's a good question because I don't know if those are the right metrics to look at across utility companies. DKMT has more experience in that, and that's why I kind of backed off and said, okay, they're the experts. They'll be able to access more information. This information is available to them. I plan on walking through them and sharing those details. And then the plan is if council moves ahead with their contract for phase 2, that they will either take these and run with them, or they've got other ones maybe that they're already working with, and they'll find their own metrics in that way. But yeah, both of us are saying move forward with the benchmarking.
Okay, Jozak?
Nothing at this time.
Mr. McDowell?
Nothing at this time.
Okay, I guess it's up to me. I appreciate this report, and I'm not too sure you aren't as qualified or more qualified than the other company doing this, that you should pursue it on, but that's not my decision to make. I appreciate your report, and it was very thorough, and I thank you very much. Okay, anybody else got anything?
Well, Mr. Chair, what I'd like to do now is go down, that was just kind of a pause for the activity budget and performance metrics.
Yeah.
Do you want to spend any time on the findings and recommendations, or should we cut this short in light of the time that we have available?
Well, it's up to the board. I got plenty of time. I'm retired. I'd like to hear your recommendations, yes.
Please.
Go through that.
Okay, so let's scroll down to, let's see, it is page 51 of 83.
Okay.
Or for those of you with paper, it's after the title page called the Performance Audit Findings and Recommendations.
Okay.
And then the first page would be the finding one.
Okay.
Everybody with me?
Yeah.
All right, so the first finding, and where I spent a lot of that time, and Mark was talking about in terms of the going into the detail, was really looking at the work orders, how the time was accounted for. And I started doing that out of a need to figure out, okay, how are we spending our time? As I got deeper into that, it became obvious that we weren't tightened up enough with our controls, and that there's the opportunity for malfeasance. Malfeasance doesn't mean that there is wrongdoing happening. It means it creates the opportunity for it. That wrongdoing could possibly occur. So about where I start down with the bullets, the reason I'm saying that is that as I look at the detail and look at the actual timesheets, you'll see all sorts of changes, whiteout, this and that. And also, and I should say, the department's responses are attached and they're further down. And what they say is that it goes through a process and it's reviewed and people put their marks on it, which is understandable. But this is where I'm coming from in terms of looking at what the physical evidence I had. Payroll record doesn't always match the timesheet. Secondly, then, about a third of the time is unaccounted for. So there's no record of what location the work was being done at, no record of what asset was being done. A lot of time that just is spent in the field. What I'm told is going from doing this and that. And what I come back to as we look at the recommendations is all time should be accounted for. It's common for the work order records to differ. And if they say they take 5 hours to change out a poll, the work order says that the payroll record just shows 8 that were paid. Some of that, the department reports back and says it's because of how the FERC accounting system is working and how various reasons and differences between the systems. That could be good, but it might, on the other hand, reflect the fact that maybe they're not maybe it only took 5 hours and not 8 hours. So again, tightening up and being able to look and see for sure. And then I spent a couple of points talking about how much time, why they begin jobs early in the morning. They say it's to avoid disruptions, but it has a huge cost associated with it. which I detail there, where we end up paying 8 hours of 8 hours of work, 8 hours of pay for 3 hours of work.
Can I ask a question quick? This is Mark
Sure.
McDonald. I'm sorry.
Sure.
Did you happen to, were you able to see how many times that was done in like a 6-month period or a year, or any kind of quantitative way of knowing that work 3 hours and then you get your meal and you get your rest period and then you go home sick?
Mark, I don't remember if I have an actual count of it. It's data that's there that could be calculated.
Okay. Thank you, sir.
Larry, I got something to say.
Mm-hmm.
Hold on, Mr. Jozak, go ahead.
Yes, I have a little experience out there in the field, and
Yeah.
it seems to me that you're just saying, well, I'll change out a pole 5 hours. Okay. There's probably 20, 30 different poles that you could possibly run into there. Traffic signals, streetlight pole, backyard, 3-phase pole, a dip on it, underground dip, 3-phase, feeding a hospital. So you just can't say, well, it took 5 hours to change out a pole. It doesn't explain everything that was involved in that. If you were just changing out a pole, you just drive right up, pull the pole out of the ground, put the new pole in the ground. But it doesn't work like that in the field. There's too many things. There's too many attachments, too many customers involved. If you're going to work on an outage, let's say the hospital, there's certain things you got to do there, and you have to work with their system. You can't just shut down a hospital off or the emergency room or whatever, change out a transformer or to fix the arresters or whatever. So there's a lot of things involved here that it's easy to write down, well, change out a pole 5 hours, but it doesn't explain. There's too many things involved here to give it a blanket coverage of just a pole or a transformer or why an outage is an outage. There's many, many, many things involved. And that's my comment.
Yeah, if I could follow up there, when I say that they're recording 5 hours, the work order will say they're going to change out a pole, change out a distribution pole. That's what the work order says. The payroll record is a different, separate record, and it will say a different number sometime. In terms of, yeah, I understand the 5 hours isn't just plopping a pole into a hole. And that's when I went back and looked at the percentage of time spent on the tasks. So there, I do recognize that there's time where you're pulling the pole, you are putting the new equipment up on the pole, and so all those details are not always identified within the work order, and that information would come from the payroll system.
Right. So there's no way to cover that.
Well,
I'm sorry.
No, part of what I'm saying is we need to have better record keeping.
Yeah.
In terms of what we're spending our time on. And as I go down, we've got new systems. It's a lot more manageable now, I think, than it has been when there was a whole lot of paper involved.
Jozak, this is Barry Porter. I think what he's getting at is it isn't a matter of whether the work takes longer or not. It's a matter of, are we keeping the right records on it of what is done, opposed to the work order and opposed to what is done. I think that's what we're saying. Is that not right?
Yes. I'm just talking about improving record keeping.
Right.
And making sure that we're following the FERC accounting rules, and we're following the various things that need to be done on the national level, on the regulatory level.
Well, yeah, and this is something that needs to be so that the public knows and our transparency that this is what is done. If somebody in customer out here sees this and say, well, wait a minute, good Lord, they're robbing us of 3 hours every day, if we have better record keeping, we have more transparency with the public. Anybody else got questions or statements? I guess you can continue.
Yeah, so why don't I jump down? Everybody can read the kind of the whereases. So looking down at the recommendations there, the city has purchased a new payroll system that it has implemented. There is a timekeeping system that they're still in the process of implementing. So my first recommendation is to expedite that timekeeping system, get that implemented, and require the use of time clocks, so that we've got actual in and out. We don't have the paper copies with all the markups and everything floating around. Secondly, in lieu of that being done, or not in lieu of, until we can implement that, which there are reasons that is still underway. At least go back and start to say, put the onus on the employee to record their time accurately. The third recommendation is to work in the next contract with Local 53 to implement Fair Labor Standards Act overtime rules. Right now we spend over $500,000 on overtime for various reasons. If we went to the FLSA rules, which would mean that no overtime can be paid before you actually work 40 hours, instead of just have 40 hours of time on the books, that would include, right now we include any personal time off in terms of the 40-hour. If we recalculated that, we could save conservatively a third of that $500,000. Recommendation 4 would, again, going at the overtime issue. We should not begin jobs unless on Saturday or Sunday, unless there's an emergency. Number 5, inclement weather. Mark alluded to that earlier, and I skipped over it just to kind of speed up. But the policy itself is detailed within the work agreement with Local 53. What we don't have is a record of what time was spent when the crews were on inclement weather time. The way it's recorded is all over the board right now. So this recommendation says, just let's document. Let's if everybody's out of the field, everybody's out of the field. If it requires, and we just need to have documentation. Number 6, we need to get rid of the use of sick leave. People will fill in sick leave after they've got a rest period, or they've, let's say, inclement weather. Instead of going there, they can go back out in the field at 2 p.m. instead of working for an hour and a half. They'll just fill in sick leave instead of taking personal leave or something like that. So tightening up, looking at that sick leave. Again, as we continue to improve and implement the new systems, the work order, inventory, timekeeping, payroll, and accounting systems, we need to make sure those are interfaced so that they can talk to each other, share information, and eliminate some of these. Is it 5 hours? Is it 8 hours? It's 5 hours here because of this. It's 8 hours there because of that. Recommendation 8, every hour paid is recorded on work order or leave sheet. We shouldn't have unaccounted for time. We need to know what asset we are working on. We need to know location. To that end, we need full functionality of the CityWorks work order system. We don't use a lot of the fields that are available that would track information like I'm talking about are not used. They just default to a start date, an estimated start date, and end date all have the same date in it. Simple things like that. The system we need to use the full functionality of what we purchased in order to manage the work order and the work system. And then we should have GPS location technology and the internet connectivity technology, so that we're not scribbling down things on paper. Time can be entered right in the field if we've got the right technology. Should I pause there or continue to go, Mr. Chair?
I think you should keep going.
Okay. Finding two, I think in general, so this kind of gets at a cultural issue, that the labor management relationship is out of balance. Right now, we don't have written policies. The only policy that's really referred to is the work agreement, which is good, and we need to be paying attention and adhering to what we've agreed to. My issue here is that we do not have written rules and standard operating procedures as managers. Our managers don't know what to do. They don't know what best practices are for all of these different topics that I've got listed. So we need to work on those, make sure that managers know what to do, when to do it, and we're abiding by those in order to fully implement the management responsibility for executing that work agreement. Number three, I think we've got some opportunities to look at, and I think, again, the other consultants will begin looking at this. These were some simple ideas that I had. You know, we could look at different functions. I picked on the trouble man. You know, one possible way of relooking at that. We could look at some outsourcing, street light maintenance, private outdoor lighting, some of those things. Distribution pools. If we've got a big project out there, it might be better to outsource those. And then I come back and talk about the benchmarking again. Finding four, looking at the budget that was presented for FY21, I feel fairly confident. I feel very confident saying that we will not have to spend the 4.2 million, and we don't need all of the 17 positions. Again, looking at the data that I was able to look at, and which is included in the other section of the report, if you go back and look at production, which is what my statistics here get at. You know, why we have $300,000 for overtime and $720,000 for maintenance when we've got 17 maintenance positions in the budget, maintenance and operation positions. So my recommendation was we just need to see, you know, what is in that. I think it's evolving as they work through the transition. The explanation from the department says that it is a transition. So my recommendation might be modified to say we just look at this throughout the year and make sure that we're coming in under budget there, because we should be. And then finding five, I think what I want to say here is that I don't know if 9% of outages caused by equipment failures and decay is good, bad, or indifferent. What I do know is that we're spending $2 million on inventory purchases, and we could measure, is that enough in terms of keeping things up to date on the poles? Or do we just fix it as it breaks? Which is not good for reliability. This also underscores the reason that we can't have unaccounted for work. We've got to know what assets are being worked on. We need to have better records so that we might know, okay, this batch of transformers that we bought from company Y, they told us they would operate for 10 years and they're only going 8. So we should be looking at those, things like that. Just being able to look in behind the data. So we need to make sure that the level of investment in new equipment is adequate. How do we compare? Again, benchmarking outages with national data. And then we need to get a full inventory of all those assets that are in IPL stewardship. So, Mr. Chair, that was a quick run through. I'd be happy to answer any other questions.
Thank you very much. I want to commend you on it, and you're saying, in my final thoughts, what I've thought all along is we have a tendency to react instead of proact. If we're proactive on our maintenance, we won't have to react to so many outages. Anybody else on the board got questions? Mr. Lamb?
Mr. Chairman,
Yes.
Mark McDonald.
Oh,
Hold on, Mr. Lamb. Mr. McDonald wants to talk.
Thank you. I'd like to say just one more time, thank you so much, Mark, for what you've done. The main thing that I saw out of this whole report, it's not an indictment against the employees. It's not an indictment about the IBEW 53. It truly is an indictment on management. As long as we've had an Independence Power and Light and we still don't have time cards, we can't account for how much money we're spending on individual projects. We don't have any idea what our attendance control process should be or policy should be. I don't know about you, but I would be so embarrassed as an operating manager and I were to get this audit. I think it took a lot of courage for Mark Tomoperry to put this thing together, but it is an indictment on the management of IPL. I think I counted 9 of the 15 findings. Mark, you can correct me if I'm wrong on that. 9 of the 15 findings are directly related to negotiations that took place with labor. Well, I know IBEW has their negotiator, but there's also a management negotiator. For them to negotiate an inclement policy like they have, and some of these leave policies that they have, or overtime policies, is unexcusable. And I hope that message gets to the council. My concern is not short-term, it's long-term for IPL and its existence. If we're gonna continue to have those kind of management. And the best part is look at some of those responses we got from IPL. It's unacceptable. But anyway, thanks a lot, Mark. I appreciate everything you did, sir.
Thank you.
Okay, Mr. Lamb, now you
Yes.
can talk.
When I got the report, I just went automatically first to the responses. And I must admit that I was amazed that the department's responses were defensive. And I was saddened to see that. I understand that most agencies don't like to receive an audit. And now the city manager's responses were more supportive. And I found that kind of interesting. I'm hopeful that when we bring in auditors or bring in consultants, that we view these as opportunities for improvement. And I understand that an auditor may not have all the background and may not fully appreciate the intricacies of the staff and so forth. But I'm hopeful that we view these documents that are coming in from outside sources as opportunities for improvement and not just say, well, they don't understand our business. I agree with Mark in terms of the union contract. I think a lot of our problems are past management that have allowed the union to control what's going on in IPL. I'm hopeful that in the future that we can get a handle on the overtime. We discussed overtime over a year ago, how overtime had really cost us a lot of money. And it sounds like it's because of the union contract. And I'm hoping that there's work being done on changing that union contract over time so that we can get a handle on what appears to be hundreds of thousands of dollars being spent on overtime that probably other agencies aren't spending that kind of money. So that's my comment.
Thank you. Jack, do you have anything?
I do, thank you. I would like to speak specifically to findings number 1.
Okay.
I personally left the organization about 10 years ago. Most of these things cited were issues at that time. It would appear from this report that a lot of that has not changed. The leadership at that time was under a process to affect most 80% of these things that you find here listed under findings number 1. But due to people leaving the organization, due to retirements, due to reassignments, nothing has been done to move in the direction of, it would appear that nothing's been done, move in the direction for remedy. I would volunteer to share these thoughts and where the organization thought they could go and how they could remedy these things with anyone that would appreciate hearing them. So rather than take up 2 hours explaining them here, I make myself available.
Thank you, Jack. Mr. McDowell?
I hadn't fallen asleep. I thought about it. That's a great report. What I've seen so far, I'm very impressed with. I don't know how long it took you to come up with all these figures, but this is very impressive. I really don't have any questions. I mean, I'm overwhelmed by all the data. Good job.
Thank you.
Thank you.
Ms. McCandless?
I would like to just ask what happens now with this report. So this has come to the PUAB. It seems as though our overwhelming response is it looks like we have the opportunity and responsibility to do better with the ratepayers' funds. And does this now go back to the folks at IPL who are in management? Does the city council hold them responsible? Does it go to the city manager? I just am not sure. Thank you.
I'll answer your question. We're going to ask after the discussion. We'll have a motion and recommend this to pass on to the council and the city manager.
Thank you.
Jozak, you have anything?
No.
Okay. I hear a motion to pass this on to the city council and the city manager.
So moved.
Second.
Second. Bridget?
All in favor? Christine?
Can I ask a quick question, Mr. Porter?
Yes.
I'm not sure who exactly made the motion there.
I believe
McDowell.
Mr. McDowell did.
And
Ms.
the second was
McCandless?
Ms. McCandless? Okay.
Mr. Cass, yes.
All right. Thank you.
Would you call the roll now, please?
Yes. Bridget McCandless?
Yes. Yes.
David McDowell?
Yes.
Mark McDonald?
Yes.
Jack Looney?
Yes.
Garland Land?
Yes.
Joe Zach?
Yes.
Larry Porter?
Yes. Motion passed. Okay, reports. Question and update utility financials for June, City Finance and Administration Department.
Mr.
Are you
Chairman,
ready?
Mr.
Yes.
Chairman, this is Mark McDonald. We've been at this an hour and a half now. I don't know that I'm going to have enough time to be able to sit through the actual reports from our departments. I'd recommend that we have a special meeting to do that very thing, to continue on this meeting. But when you start getting a meeting that's an hour and a half long plus, you lose its effectiveness. You're just
Correct.
going to start rushing through it.
Well, I think we can hold off the financial and service reports until the 17th, in fact, next month, if you want.
Larry?
It's up to the committee. Or board.
Larry?
Yes.
Joe Zach, I got two things here. One, if we do have another meeting, why can't we keep social distancing and sit somewhere, keep the masks on at 6 feet, and we can discuss a lot better than we can through these phones and all this, and we get maybe a little better input. Just a comment.
Stand by, please. Stand by. Just wait a minute, please. Mr. Jozak, I'm going to address that. I need to talk to Adam. Because the mayor couldn't get a hold of me, I guess me and her have difficulties. She called Mr. McDonald and advised that we could have our meetings at the city council chambers. Now it's up to the committee and Mr. Adam to figure out the logistics of that and get back to us. And then I'd have to have a vote if those logistics and the time and date would be sufficient or appropriate for us.
Outstanding.
Adam, do you have any idea on that? Did the mayor talk to you?
She talked to me today about it. So we'll have to look at, times, because that room gets used a little bit during the course of the week, and see what's available, because that is a courtroom too. So I'll have to look at those logistics, and then I'll propose a few dates and times to this committee. I think before I go through that exercise, I'd appreciate it, make sure everyone wants to do that, and then I'm sure we can propose a few times, and hopefully one of those would work with everyone, if that's the course you all want to take.
Okay, thank you, Adam. Christine, could I poll the board on meeting in the council chambers, if we can find a date and time? All those in favor say yes.
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 Jacqueline?
Joe Zach. Joe Zach, yes.
Would everybody hold up till Christine polls you, please?
Okay.
Okay, Mr. Porter, you're making a motion to move the meeting to the city council chambers if the date and time would be agreeable to the board?
Yes, and we wouldn't have a time until I'm just polling the board if they want to do that at this time, if they all want to meet in person, social distancing, and if so, have Mr. Adam to pursue and work out the logistics with you and the city council or whoever up at City Hall.
Okay, thank you for clarifying.
It's actually not a motion, it's just a recommendation.
Okay, but you want me to call the roll, correct?
Yes, please.
Mr. Chairman? Jacqueline?
Yes.
I was hoping we'd have just opportunity for some minor discussion, but I'd like to contribute that if it's done at City Hall, maintain distancing, we're talking about sitting in the audience to maintain distance with the number of people that we have. I would contend that we can maintain distance at the municipal services building easy. Thank you.
Okay, Jack, I didn't know whether have you been observing the city council meetings?
Yes, sir.
Well, they got space up there. They got petitions up in between everybody. If that isn't all right with you, I'll just let Adam work that out. If that's all right with you.
No, it's not a matter of me. It's a matter of, we spoke to this issue before, and the group has voted to stay in the municipal building, so.
Okay.
Mr. Chairman, Joe Zach.
Joe Zach.
Yes, you're going to find this hard to believe, but I concur with Jack Looney on this, and I think the municipal building is even better because the way the tables are set up in there, it's more or less a round table as compared to City Hall. So, I'm all in favor of format up there. Anyway, that's my comment. Thank you.
Okay, I just don't know whether the mayor will agree with that or not because of her responsibility to the community and the COVID thing. Adam, well, this is not a motion then. I'll reject. Adam, would you get with the mayor and see if she would be in favor of letting us go to the utility building where we always went? And
the preference is using the council chambers because the partitions and everything else are already set up there to provide the necessary safety measures. That is the basis for having it there, because those things are already built. It's working sufficiently for city council meetings, and it would work for this board as well.
Well, that's what I thought too, because you have spacing in the audience there where people, if we want anybody from the public to come in, they have to space out. It's already marked up there for them. So
correct. I think the occupancy is 31 people, and then we also have a separate room adjacent to there that we often stage some of our staff, and then as their items come up, they can come into the room to keep occupancy levels down. So it seems to be working well for us.
All right,
Mr. Chairman.
Yes.
Would you entertain a motion for us to have our meetings at the council chambers?
Yes, I would.
So moved.
I have a second.
Here, Mark McDonald.
Any more discussion? All right, now we have a motion. Christine, would you go ahead and call the roll?
Bridget McCandless,
Yes, and
David McDowell,
Yes.
Garland Land,
Yes.
Jack Looney,
No.
Joseph, Joe Zach,
Yes.
Mark McDonald,
Yes.
Larry Porter,
Yes. Motion passes. Adam, would you please work out the logistics on that and get back in touch with me, please?
You got it, sir.
All right, thank you very much. I'd like to entertain a motion now to pass on the rest of the reports until our next meeting on September the 17th at 2:30, whether it be at City Council or on the phone.
I'll make that motion.
So moved.
Mark McDonald, so moved.
Second? Do I have a second?
Second.
Any more discussion on that? Okay, hearing none. Christine, call the roll.
one quick question, was the second Mr. Land?
Yeah,
No, it was McDowell.
McDowell made the motion. Or,
Mark made the motion.
Mark McDowell made the motion, McDowell
Charlotte,
seconded.
it's okay.
This is why we need to meet in person.
Okay, so just to clarify, Mark McDonald made the motion and David McDowell seconded.
Yeah,
That'll work.
that'll work.
Okay, well, I'll call the roll. Bridget McCandless,
Yes.
David McDowell,
Yes.
Garland Land,
Yes.
Zach Looney,
Germophobic Jack Looney votes no.
Joe Zach,
Yes.
Mark McDonald,
Yes.
Larry Porter.
Yes. Before we adjourn, Adam,
Yes,
are you
sir.
there still?
I'm here.
Yeah, get Christine to give you my phone number, both of them, my home and my cell,
Wait.
and pass it on to the mayor if she wants to call me.
Okay. I should add that whatever date and time we decide on, we will of course offer, virtual meeting options for those members of the board that want to meet virtually and not in person. Okay.
That's great. I appreciate your help on that, Adam.
And this is Bridget.
Absolutely.
Bridget, go ahead.
May I clarify, is the expectation that we will actually stay until we complete the items on our agenda at our next meeting?
Yes, ma'am.
Okay, thank you.
You don't get overtime pay.
I know, but the items about people not being able to pay their bills is so important that I certainly hope that we give it its due at our next meeting.
I understand that perfectly, yeah, and we got to work through this problem we got, but we'll get it done. We seem to every day. So everybody have a great meeting adjourned. Hello?
Yep.
Amen.
Amen. Bye.